live and I'm so excited. So I have changed locations. I'm hoping to have better internet, but just in case I don't, it's okay. Let me turn the camera around a little bit. I have not, normally when I try to record in my office, sometimes it acts a little on the wonky side. But we're going to go for it anyway. So I'm just going to adjust a few things right quick. How are you guys tonight? Plus, we're a little bit early. So excited. So I'm Garlinda Price, and I am a real estate broker and owner of Fusion Properties, LLC. I'm also the owner of Fusion Insurance Group. So excited for us all to be here together on tonight. And again, I sometimes end up fighting with my light in my office, but we're going to work on that. And I know that, let me see, we have about 2 more minutes, so we're going to get started in 2 minutes. I'm just going to work on a couple of technology things and give you all a couple of minutes to join. Tonight we are going to be talking about the best insurance to pick for you and your family, and potentially why. What is the best insurance for you guys? What are some things you should be thinking about for you and your family? What is the right insurance for your family and for your goals, right? So I'm just going to be working with my lighting right quick while we're just giving 1 more minute for people to get on. And I hope you all have had a great day today. I have. It started out a little rocky, but it got better from there. So anyway, I'm not going to fight with the light tonight or my office chair. So it is 1 minute to 7. We're going to give a few more minutes for a couple people to get on, and then we're going to go ahead and get started. I live in the country, so you'll hear motorcycles going by and everything else from my office view. So again, let me log on to my channel right quick. Tonight we're going to be talking about the best insurance for you to get for you and your family, the best insurance to select and why. And you'll know which one, because we're going to have a complimentary insurance appointment, you and I. Right, so let me turn this down. We're going to have a complimentary appointment, and I already put over in the chat, I put our Calendly link so that you can schedule an appointment with me for you and your family. It doesn't cost you anything for us to have a discovery session and for us to be able to talk about your insurance needs, because what COVID did was it brought into reality that we have, what's the word I'm looking for? That we're not immortal, right? Because sometimes people think they're going to live forever. Like, we all feel that way. Like, well, you know, if nothing bad has happened, why should something bad happen? And sometimes people just don't think about their immortality. And so tonight, what I wanted to get on here and talk to you about, again, I'm a licensed life insurance agent, and I've been licensed now. This is my 2nd year as a licensed life insurance agent in North Carolina. Years and years and years ago, I actually worked at Fusion Properties, at First Union. That tells you my age, right? When it was First Union, then it became Wachovia, then it became Wells Fargo. So I was a financial advisor, not a financial advisor. I was a financial rep at the bank. So I did the loans, we did the auto loans, we did credit cards, we did annuities, we did life insurance, and all those different things. And so at the same time, I owned salons. So I never really focused on that career. So now, going into my 14th year as a real estate broker and owner, people started asking me about mortgage protection insurance and how they, I'm gonna write myself a note right quick, mortgage protection insurance and what they could put in place to pay off their home in the event of a death. So I'm just going to write that down right quick, make myself a note. Thank you all for being here with me on tonight. I'm just writing down a couple notes, because I don't want to forget to talk to you about those things, okay? And then let me just go over here right quick. And then we're going to get started. 2 minutes. Thank you for your patience. So excited to share this information with you, because so many people don't know what they have, right? They don't know the insurance that they have. They don't know the insurance that they need. And I'll be honest with you that until I got my license, I don't think I really focused on the type of policy that I had. And then I realized I didn't have the policy I wanted, right? I didn't have the policy I felt like I needed. And that sucked. So right quick, I'm just gonna let me log on to Facebook so we can share over there as well. And then we're gonna go ahead and get started talking about the best insurance. And really, I'm not gonna advise you on I'm not gonna say, hey, this is the insurance you should get, right? Because I don't know your situation. But what I am gonna say is let's talk and find out what insurance you have and what insurance you need based on your goals. I'm sorry, it's taking me a second with this. Hold on one second. So again, thank you for being here with me. I'm just trying to hit the go live button. And then we're gonna get started, okay? And again, if we end up having any technical difficulties, just it'll adjust itself. I live in the country. Select my media source, allow. Okay. Okay, let me add my title and we're ready to go, okay? What is the best insurance for you and your family? Okay. Okay, thank you for being patient with me. I'm almost ready. I should have done this beforehand. I apologize. But actually, the Holy Spirit just gave me the idea, so I didn't think about it, so that's why I'm doing it now. So thank you for your patience with me, okay? For hanging in there. So we put our title in. Okay. And we are ready. So it's doing a countdown now. Okay. Okay. So let's go ahead and get started. We are 5 minutes in. So super excited that I'm sharing with you all on tonight. We're talking about the best insurance for you and your family. It looks like my camera's not working properly. So we're just going to keep on talking, right? So what is the best insurance for you and your family? Those are the things that we're going to be talking about tonight. And for whatever reason, my camera looks like it's just not cooperating. Let's see what's going on. And I don't know why that's doing that. What we found out during COVID is that many people were thinking about their mortality rate, right? Because people started passing away that had not been sick. I'm gonna just keep talking to you, working on this. That had not been sick. Of course, there was nothing wrong with them before. And then all of a sudden, people start passing away. And so what people realize and what families realize is that they did not have insurance or the proper insurance for their family members. And so what ended up happening was a lot of people passed away and people had to figure out how they were going to bury their loved ones, right? And so we hear that all the time. We see it all the time where people will end up having GoFundMe campaigns. People will end up having bake sales. People will end up having fish fries, and people will end up having to take donations and do these various things in order to bury their loved ones. And so that is really one thing that we talk about all the time in insurance is why are there not enough people out here selling insurance and providing insurance in an effort to help people get their families in the proper position. And let me check one more thing and then we're going to go ahead and get started. And why are we not out here putting people in the proper position that they need to be in? And so that is one thing that I think is super important with figuring out what do you have, right? Do you have an insurance policy through work? Do you have an insurance policy that you own on your own? What type of insurance and policy do you have in place and it's been set in place for you and your family in the event that something were to happen to you, right? And so that's what we want to talk about tonight. And so one thing, I want to tell you a couple of objections and things that we hear all the time from people is that they have insurance through work, or they have insurance through their job, or they have insurance through their spouse's job. And even though you may have insurance through your work and through your job, or insurance through your spouse's job, it doesn't mean that you're covered. It doesn't mean because you have insurance through your spouse's job, doesn't mean that you're covered when that job ends. It doesn't mean that you're covered if something were to happen to you. It doesn't mean that you're covered in the event you lost that job. And so it's not enough to just have job coverage. It's okay to have that as a benefit, because we talk to people that are in the military all the time, right? And with people that are in the military, they have something called SGLI. And then when they retire, they have something called VGLI, right? So we're gonna talk about those two things as well. I'm gonna make myself a note: SGLI, VGLI. So when you think about the fact that you have a work policy, that's great that you have a policy at work, but what do you own on your own in the event something were to happen to you and your family? That's most important. So one thing about coverage that a lot of people have, and I'm just sharing with you facts, and then we're going to talk about specific products in a second, right? One thing that people have, I'm just setting y'all up right quick. One thing that people have that they don't know in their policies is an accidental only policy, right? Sometimes people don't even know that their policy is accidental only, meaning they'd have to die in an accident in order to be covered by their insurance policy. So what we're going to be doing is we're doing free policy reviews. I'm sorry, I was getting hot. We're going to be doing free policy reviews, but I want you to get your policy out this week, and I want you to look and see what it is you actually have, so that you'll know what you have to protect you and your family, because there are different policy types that don't cover everything. So we're going to talk about that. So let's start with an accidental only policy. Let's say that you go through looking through your policy and you've been paying on this thing for the longest time, or it's through your job, or it's through a union, or it's through an organization, or you got the policy from somewhere, and maybe you got it when you were younger, or it's a policy that you just recently got. You felt like it was a great price, you felt like it was a great deal, and then something happens and your family goes to look and finds out it was only an accidental policy. Well, what does that mean? So an accidental only policy means you have got to die in an accident in order for it to pay out and to provide coverage, right? And so that's not necessarily a bad thing, because accidental policies can be very inexpensive to start out with, and there's nothing wrong with having an accidental policy, but it cannot be the only insurance policy that you have in place for you and your family. Because if you have an accidental only policy, and if I don't want to use you as an example, if someone has an accidental only policy and they die of a heart attack, or they die of cancer, or they die of a stroke, or they die of any other terminal illness, but they only had an accidental only policy, it will not pay out to their family. And what you'll find is that an accidental policy is great to have as a rider. It's great to have as an additional policy. It's okay to start out with that. If you have a really low budget and you're like, I just need to get some insurance to protect myself and my family, you can get an accidental policy with one of our carriers for as low as $25 a month, $35 a month, $40 a month, $50 a month for high values. But you just need to know that when you're buying an accidental only policy, you've got to die in an accident, right? It can have an accident is determined by the insurance carrier, is defined as something you weren't aware of, something that caught you off guard. The person caught off guard by an accident, something they were not expecting to have happen to them. So that's one type of policy, is an accidental only policy. Another type of policy that we've all heard about is a term policy. Now, term policies get a bad rap sometimes, and some people love term. You've heard that term, buy term and invest the difference. I don't ascribe to that way of thinking. I don't believe that at all. I believe that a term policy is a great policy for a specific person, for a specific individual, or for a specific age group. And it's all of these things that will be based on your goals. Like, what is your goal for you and your family in the event something was to happen to you? But I will tell you that a term policy, so why it's defined as a term is it goes for a certain term. It could be for 15 years, it could be for 20 years, it could be for 30 years. It's for a certain amount of time. That means that once that amount of time, that 15 years, that 20 years, that 30 years, once that time goes or passes away, passes on, and you meet that time goal, that insurance goes away. right? There's nothing wrong with that. And I'll give you an example. So we sell a product called mortgage insurance protection, right? So that's just one type of term product. So for someone that owns a mortgage, and let's say that mortgage is $200,000, and they want that mortgage to be paid off in the event of their death in full, as long as they can qualify for it with their health, because you don't just buy insurance, you qualify for it with your health. You'll hear me say that all the time. As long as they can qualify for the term coverage with their health, I will tell you that term is the hardest to qualify for if you're in poor health. It's the hardest to qualify for if you're on a lot of medications. It's the hardest to qualify for once you're over. It becomes more expensive the older you are, right? So the older someone is, the more health challenges someone has, the more medications that someone is on, it's harder to get term coverage, right? So the banks used to offer mortgage protection insurance. That meant that back in the day, whenever someone purchased a home, the bank would provide this type of insurance coverage that would pay off the mortgage in the event of the death of the owner of the mortgage, right? But what was happening was some of these mortgage companies were making themselves the beneficiary. So that meant that the family wasn't even getting the mortgage insurance money, the bank was. So several years ago, that was taken away from the insurance carriers, that now if you want mortgage insurance protection, you purchase that for you and your family. That's why when you buy a home, you get all these postcards and things in the mail saying, hey, give us a call. Time's running out. If you want to take advantage of this benefit to pay off your mortgage in the event of your death, you may qualify for critical, chronic, or terminal illness. Give us a call. That's what those postcards are all about, right? So I want you to give me a call if you just purchased a home and you do not have insurance in place to pay off your home in the event of a death. Maybe you don't qualify for that kind, but we're going to talk about the other kinds that you could qualify for. But if you're young, if you're in great health, if you fall within weight guidelines where you know you're not significantly overweight or not obese, right, based on height, we'll know that, and we can shop different carriers. We represent about 10 plus carriers. So we are brokers. We can shop around, and that means we can find the best rate for you and your family. So for the term coverage, what it's going to do is it's going to protect you for the time that you own that mortgage or that term, 30 years. And if something were to happen to you, it would pay your family the face value that you've paid for the product. For example, $100,000, $200,000, $300,000, up to $500,000 or more, right? Whatever you want, then that's what the term product can cover based on age. But most term products cut off at around age 50 or 55. I think it's like age 50 for most term products, right? It could be age 55 depending on the carrier. So that's why it's limiting. The other thing that a term product doesn't do, although it is super inexpensive, it is one of the most inexpensive products behind accidental. A term product does not have any cash value. So you can't borrow against it. You can't get any money against it. Or make any money off of a term product, right? Sorry about that. I keep fumbling with this button. So when you go to get a term product or term insurance, you just need to know these three things. You need to be in the best health. You need to be under age 50, right? Because really 45 is that gray area as it relates to a term product. And then also you want to be in your best health, right? But a term product behind accidental is the least expensive product. Hey, Christine, how are you? God bless you. I can't wait to talk to you. I hope you have safe travels home. Thank you for such a great meeting call today. Christine is my sales manager with Life Now Insurance Group and Family First Life. She is awesome. So we're talking about an accidental policy. We've talked about a term product, and we've talked about mortgage insurance. So when you hear the term mortgage insurance or mortgage protection insurance, that's just a marketing term for a life insurance policy that would pay off your home in the event of a death, or in the event of a death. I don't want to say disability, but that is included. We'll talk about that, okay? Another type of term product that you could think about getting is a term product that it's also called a universal life product, right? So that's a product that offers a cash back option. So we represent one of our carriers has what we call the CBO, a cash back option. You can get a cash back option 50 or a cash back option 100. Nobody ever told me about this when my husband and I were purchasing insurance, right? So now that I'm 53 years old, I've owned my insurance policy prior to coming back into the insurance industry. I'd had that policy going on 20 years. So when I found out that there was a product that would give me my all of my premiums or half of my premiums back at the end, which is coming up, right? I mean, I own better insurance now, but if someone would have told me that then, imagine how much money we would be getting back at the end of that 30 years that now we could take and invest it into something else. But hindsight's 2020. So that's why you want to work with a reputable insurance broker like myself and our insurance company, because we're going to tell you the things that are out there available to you and your family that you may not have heard about, that you may not know about. You don't even know is out there. Some things are hidden in plain sight to us, and it's not because I think people want to keep it from us. It's because we don't go do the research, or we don't know where to look, or unless someone comes and tells you about it, you wouldn't know about it. So a cashback option policy is a policy that if you qualify, again, with your health, we talked about that, right? So if you qualify based on age, you qualify based on health, then you could get 50% of your premiums back that you paid into this policy over a certain amount of time, 15 years, 20 years, 30 years, whatever you choose, right? You would get 50%, half of the premiums back that you paid into that policy. If you say, no, Garland, I want the whole enchilada, like I have clients that I've sold the 100% premium return policy to, they're going to get back 100% of their premiums less any expenses. They're going to get that back at the end of 30 years. They can then take that money, right, when they're then 50, 60, 70, however old they are, they can then convert that into an investment if they choose to go invest and pay off some debt. If they choose to blow the money, whatever they want to do with it, if they choose to invest it in permanent or whole life insurance coverage, they can do that. So just know that sometimes people get term products, and then when we go to talk to them about it as professionals, they're like, I had a term product and I didn't see anything from it. I didn't get any benefit from it. Well, thank God you would have only gotten the benefit from it if you died, right? So thank God that you didn't see the benefit from it, but it wasn't a waste of money. It protected you for that time. And one caveat I want to throw in there right quick is we have got to stop seeing insurance as an expense. Insurance is not a bill. It's not like getting your nails done. It's not like getting your hair done. It's not like going to buy groceries. It's not like buying a handbag. Insurance is an investment in your future and your family's financial future. And we've got to stop looking at it like it's a debt. It is an opportunity to protect our families, and you can enjoy insurance while you're alive. Right, so we're going to talk about that tonight. So I don't want to belabor that point, but we've got to change our mindset around how we view insurance. It's not just death insurance. Tonight we're going to talk about insurance that will benefit and bless you and your family while you're in the land of the living and beyond. Okay, so the next type of insurance we're going to talk about, that was our cashback products that we talked about, and we call those living benefits, right? Because you can get back 50% to 100% of your premiums while you're still alive, and then you can just reinvest that money. It is the best savings account you will ever have that you never knew you needed, right? Because how hard is it really when the minute you decide, not you, we're talking about other people. The minute people decide they want to save money, the air conditioning breaks, the hot water heater breaks. So when you have insurance products that will pay you back at the end of a certain term, that means that you had a product that not only covered you and your family and protected you and your family for a certain amount of time, but it also is an incredible savings account that at the end, you're going to get your money back. And you won't even have thought twice about that money you set aside. Let's talk about a whole life product, right? I have gotten this often when I was working with clients that their parents told them not to buy whole life. My mom and them told me not to buy whole life. Daddy and them told me not to buy whole life. I don't understand why somebody would tell you not to get a product that will cover you for your whole life. It doesn't make sense, right? And now there's a company that will give you that will allow you to get whole life at 40. Before, there was this age gap of clients. Last year when I started selling insurance, there was an age gap of people that didn't qualify for term that, God, we were like, wow, if we could just get them into a whole life product, it would be best for them. It would be good for them, and they would qualify for it, but they were too young, because a lot of the policies started at age 50, right? So now there's a company, which is one of my favorite companies, and they will start you off at age 40 with a whole life product. And what whole life means is it will cover you from the day that you qualify and you get approved to age 120. Now, most people will say, I'm not living to be 120. I don't know. People are living longer now, right? So it will cover you from the day you get approved. And we do a lot of simplified issue. We're going to talk about that. Let me just write myself a note. and it will cover you until you're age 120. But what's awesome about a whole life product is you can borrow against it. Once you've had the money in there for a certain amount of time, and every policy is different, but it will tell you when you can begin to take money out of the policy. You borrow from the face value of the policy, right, based on the amount that you've put in at a certain point. So you can't borrow from it the same month you put money into it, right? But at a certain point within the whole life product, you can borrow against the face value of the policy, right? And in the event that you were to pass away, your beneficiary would receive the face value that you paid for minus any outstanding loans you have against the policy, right? So not only can you borrow against it, it earns money, right? So not only is it gonna allow you to have money that you're earning over time that you can borrow against, and not only is it permanent insurance, you're gonna have it as long as you don't let your policy lapse until age 120. You're not ever gonna have to worry about requalifying for insurance again, right? If you get the right product working with the right agent, which is right why you're gonna call me. I'm not gonna put you in a janky product, right? And you're gonna be able to borrow against this money if and when you need it. And you can use the money for anything, right? So here again, another great opportunity to be able to save money, to be able to have money not only for your burial, but also that you could borrow against, and it earns on average, and we can't quote, what you might make, but you could potentially earn on average 5% or higher, right? So a really great product. So I don't want you listening to people when they say, oh, my mama had a bad experience with this, or my aunt had a bad experience with that. Every person is an individual, and insurance is, you get insurance based on your health. You don't just pick up the phone and say, I want to buy one of those whole life policies. No, you got to qualify with your age, your health, any medications you might be on. So you want to be in the best health, and you want to start while you're young. Insurance is cheaper when you're younger. Okay, so let's talk about critical, chronic, and terminal illness. So remember I said that there are policies that you can benefit from that call me today. And I know that that's Christine saying, tell the people how to reach you, right? So I'm going to type in right quick. Let me see if I can type down here. I'm going to give you my phone number. It's 910-494-7798. And I'm going to put my Calendly link again in here for you all to reach out to me to schedule a discovery appointment. I'm just copying and pasting it into the chat for you. Thank you, Christine. And I want you to reach out to me to schedule an appointment, because we can review your policy. We can look and see what you have. We can see where there's gaps in your coverage or gaps in your wealth building plan, right? Because again, you may hear people talking about, well, what is this private banking? What is this wealth building stuff we're talking about? We're going to talk about that. But right now, let's stay on track with critical, chronic, and terminal illness, okay? So until I got back into life insurance, right? Because again, I mentioned years ago, I had been with the bank, and I didn't take it that seriously, honestly, because we were forced to just open accounts, and get people into annuities. Our job was not to talk to them about life and health insurance, although we had those licenses, right? So now you can actually benefit from these living benefit products in the event you had a critical illness and could not work, or you had a chronic illness and could not work, or you received, I don't want to say you, or someone received terminal illness information about their lives, and they're like, oh God, well, that's it. It's a wrap, right? They're not taking any more turns around the sun. And now they've got to figure out, okay, well, how am I going to pay for my monthly expenses? And so a term I heard over the weekend, which I thought was really awesome at a wealth building class we took, was MUG, right? Mortgages, utilities, and groceries. And so these three policies, critical, chronic, and terminal illness riders that you can add to your insurance policies, will pay you in the event you become chronically ill and can't work, right? I'll give you an example. So one of the carriers that we write with has a heart attack and stroke policy, right? As a rider, has a cancer rider. So that means that the minute someone has a heart attack and they have that policy and they've been paying on that policy and it has not lapsed, right? And they go to file a claim that they had a heart attack, that carrier is going to then send them a check for the amount of the coverage that they had, and they can use that money to pay for their prescriptions, to pay for their mortgage, to pay for their rent, to pay for their utilities, to pay for their groceries. How powerful is that, right? I never even knew those type of policies existed. And let's say that someone has, that's a critical illness. Let's say they have a chronic illness and can't work. Same thing, heart attack, cancer, stroke. You have all these terminal illness riders, and the debilitating diseases and those things are there outlined in the fine print of the policies that you're interested in. So when you reach out to us as professional brokers, we can tell you what those diseases are that are covered. Terminal illness, that person, like I just said, isn't going to make any more turns around the sun. They could take that money and benefit from using that money while they're in the land of the living to cover their expenses and not be a financial burden on their family, because none of us wants that, right? None of us wants to be a burden on our loved ones in the event something were to happen. So these are policies and things that are out there that are available now. Let me write myself one more note. And we can help you get those coverages. So children's policies, you know, a lot of times, and I used to feel this way too, right? I didn't want to think about getting a policy on my children way back in the day. I don't think that way now. But my mom was like, hey, I got the kids the Globe Life policy. I got my kids the Penn Life policy, or whatever it was. I'm making up something, right? But she had gotten these policies for them when they were babies. And so you think, oh, well, grandma took care of it. We're good to go. Don't most people think that they get that policy and they stick it in the drawer somewhere? They don't think anything else about it because we don't want to think about our sweet little babies dying. But that is not what children's whole life insurance is for. It's not to cover your child. And yes, it will cover your child in the event of a death, but the blessing of a children's whole life policy are three things. One, it guarantees their insurability as they grow older. Right? So that means that as long as you don't let that policy lapse, a really good children's whole life policy that we have access to, as long as you don't let that policy lapse, your child is guaranteed insurance, right? Guaranteed insurability with that company. So if they decided they wanted to go buy another policy later in life, they can buy a policy from that carrier without having to provide proof of insurance because you got them that policy. Let's say you have that policy in place. I keep saying you. Let's say someone has a children's whole life policy in place, and God forbid something happens to their child gets a childhood illness, right? But they already have that policy in place. Well, if they don't have the policy in place and that child gets a childhood illness, now that child is not going to be able to potentially be insured later in life because of the childhood illness, or for several years because of the childhood illness. So children's whole life is not just for the death of a child. It's to make sure that your child can get insurance coverage when they need it without having to provide proof of insurability in the long term. Not only that, they can keep a children's whole life policy. I think you can be up to age, I don't want to quote it wrong, but up to age 16, I believe, and get a children's whole life policy, and then they have to get an adult policy after that. But they're so super inexpensive. In addition to that, that policy can go into their name as they're older, and they can add to it. But not only that, they can borrow from it, because remember what I talked about with whole life, that they had the component to borrow against, right? So that means that they can borrow against that whole life policy as they get older and it continues to grow. So again, I want you guys to give me a call. I put my Calendly link in the chat for you to schedule an appointment with me for us to talk about your specific needs. Okay, so let's talk about, we talked about children's whole life. We talked about critical, chronic, and terminal illness. We talked about mortgage protection. Let's talk about equity protection. So mortgage protection, we talked about what that is. That's a life insurance product that would pay your mortgage in the event of a death, in whole or in full. You have to qualify for it based on your health and your prescriptions and all those things. And let me write one thing, because all my thoughts are coming to me, but I don't want to forget. So let's say that you don't qualify for a term product that would pay your mortgage off in full because of age and because of medications and because of prescriptions. Well, you could get equity protection, right? So equity protection could be a combination of term and whole, or it could be specifically a return of premium product, or it could be just a whole life product. And what will happen is you would get just enough for your family to be able to make a decision for a year, 2 years, 3 years. You basically are buying time. That means that when you passed away, there would be enough money for the family to figure out, do they need to refinance the home? Do they need to move and then rent the home out so that they can keep the home and be able to let somebody else pay the mortgage after you pass away? So equity protection is designed to protect the equity that you have in the home. And it is an excellent product for, let's say, someone that is 60, 65 years old, 55, 60 years old. It's an excellent whole life product that you can put in place that is affordable, and oftentimes it can go from 35,000 up to maybe 50, 55,000 depending on the company. And what that product is going to do is when you pass away, it's going to give your family a lump sum of $35,000. But get this, a lot of whole life policies that you can be used for equity protection double in the event if you die of an accident. So not only will they get $35,000 if you have a whole life policy, right? But if you die in an accident, it doubles. They get $70,000. So there's so many incredible products out here. Plus, some of them have a critical and chronic and terminal illness rider that you can attach to it. Plus, you can add an accidental death benefit policy to it. Remember I said there's some out here that are as low as $25 a month, $35 a month, $40 a month that don't require a medical exam. So that's equity protection. Payment protection. I want to write myself a note right quick. I don't forget to tell y'all things. We're at 35 minutes, right? So we're doing good. I want to keep this to 45 minutes if possible. I wanted to go faster, but it's so much information. So payment protection. And what payment protection is like the same as mortgage protection. It's the same as equity protection. It's designed that in the event you were to pass away, you have enough insurance that would provide your spouse, your loved one, your children's, your family member, whoever it is. It could be a church. You could donate to an organization. It doesn't have to be a family member in case you don't have family, right? A lot of people I've talked to said, I don't have family, I don't have kids. But they go to church, they love their church, or they're in a sorority or fraternity, love their organization. You can get a policy that the beneficiary is a non-person, right? I don't think you can leave it to a dog. I'm not sure, but I mean, Michael Jackson left his the bubbles, but I don't know. I digress, right? So payment protection, it's going to give you enough insurance to make the mortgage payment, to keep your home intact and your mortgage intact, to give and buy time for that person, the beneficiary, to decide what to do with your home, right? So that's what those three things are. So let's talk about simplified issue. No, let's talk about two more things, two more types of insurance, then we'll talk about simplified issue. So the last two I want to talk about, because I live in Fayetteville, North Carolina. Shout out to the 82nd Airborne. So this is the largest military base in the country. It's Fort Bragg, right? If you hadn't heard of Fort Bragg, I have no clue what rock you living under, right? Just kidding, right? But this is the place. And I'm the daughter of a Marine. So Simplified, shout out to all my Marines and people that maybe will hear this later on that are Marines. So SGLI, that is the insurance, of course, that if you're a veteran, you already know that the military gives the veteran while they're on active duty. It covers them upwards of $400,000 to $500,000. So a lot of times when you're called to talk to a veteran and you want to offer them insurance, they're like, well, what do I need that for? I got $500,000 in coverage while they're on active duty. But that's true. And it covers them when they leave U.S. soil. So when you contact a veteran and you want to talk to them about insurance, you've got to know what they have or don't have, and you want to know how you can add value to that veteran, right? Because in their mind, and it is true, they do already have a really large policy, but does the spouse have a policy? See, a lot of times we only think about when someone is a veteran, we only think about the veteran dying. But what if the wife gets cancer? What if the wife gets critically, chronically, or terminally ill, and she's the one that's running the household and they have kids? Now, and then you think about what is the replacement value of a spouse, of a stay-at-home mom. It's about $100,000 a year, right? There was a study that was done, and they've determined that a stay-at-home mom is on average worth about 6 figures because she does a lot. She runs the household. Normally, she keeps the finances. She keeps the kids. So if in the event that spouse passed away, that is the caregiver for the children, now they've got to enroll the kids in daycare, they got to put them in school, they got to figure out who's going to take care of the finances and do all these different things. So with the veteran having SGLI, they also need to put coverage on their spouse, right? So you want to talk to them about that. And if you have a veteran that is retiring and they're getting ready to go to VGLI, which is Veteran Group Life Insurance, it is not good over time. It's good starting out, just my personal opinion. So I don't want to say it's not good and everybody thinks that way, but starting out is very inexpensive, but as that veteran begins to age and as that veteran begins to get older, and if health issues begin to come in play for that veteran, then that insurance becomes super expensive to the point a lot of veterans can then no longer afford to keep the coverage, and they end up having to let it go, right? So we've got to be able to be there for our veterans to protect them and let them know what's out here and available to them. Now, when they buy a policy from you, you need to let them know that when they go overseas in a war zone, they don't have coverage with the policy that they bought from you anymore. That's okay because they have their SGLI, right? And then when they're retired, it doesn't even matter, right? But if they're active duty and they get a policy from you, they're not covered when they go to war because SGLI kicks in then. But when they come back, they're covered. But their spouse still keep their coverage. So I need to check my battery on my phone, make sure I have it in the red, but I don't think it's gonna hang up before we finish. But if so, I'll be back. So we talked about SGLI, we talked about VGLI. So if you're a veteran, we need to talk, right? So regardless of who you are, we need to talk. We need to talk about your policies. In the beginning, if you were late joining me, we talked about having a policy for work. You do not want to just depend on your work policy. If you get fired from that job, if you quit that job, if you get laid off, you no longer have insurance coverage. And if you do get to carry coverage over, it's through COBRA, which is super expensive. So you want to own your own policy so that you are in control of your own financial house. Amen. So I'm going to put my calendar link in here one more time. I want to invite you to give me a call today. We're scheduling appointments where we do a free policy review. We'll understand and ask you a bunch of questions about your goals so we can help you and your family get covered and protected. Let's talk about three more things. So we do simplified issue. All of our carriers do what we call a simplified issue underwriting. That means that there are no medical exams. The only time that we do any type of medical exam is if you want a policy that's over $450,000. Then they're going to do a swab to make sure that you who you say you are and you're not getting insurance in the name of someone else. They're going to do a medical exam if you want $500,000 or higher to make sure that there's nothing in your blood that is underlying that you can't see, that you haven't been diagnosed with, to make sure that they're not buying a liability. So we do simplified issue. That means that you don't even have to have a medical exam, and all we check is your credit history. That is checked on some carriers. They check your MIB, which is your I think it stands for Medical Information Bureau. They're going to go back and look at all the things you were ever prescribed. So like if I go to the doctor now and let's just say I have a head cold and they're like, well, we're going to prescribe. No, you're not. I tell them, you're not prescribing me anything because I'm not going to take it, number one. But number two, you're going to jam up if I want to go buy another insurance policy. So when you go somewhere and you really don't need the prescription for whatever it is, don't be taking random prescriptions, right? It goes into a medical file. And so that's how insurance companies and insurance carriers are able to track you and keep up with everything that you have going on. So whenever we give you a call as professionals to say, hey, let's talk about your medical history, don't lie. Because it's in the MIB. And what happens is you don't even have to lie because we have so many carriers that we represent that we're blessed to search and shop for on your behalf. We're going to be able to find something. We have guaranteed insurance for people of a certain age and certain health that they're guaranteed coverage, right? We have insurance for people that have diabetes. We have insurance for people that use medical marijuana. We have insurance. We can cover you if you have a felony. Now, mind you, the felony has to have been on the other side of 5 years, right? So 6 years and onward, we could probably get you covered as long as it wasn't a dangerous crime, right? Or they have different scenarios that we have to go through for underwriting, but you can have had a felonious background and still potentially get insurance. That is huge. That's huge. My husband and I were talking about that when we found that out with 2 of the carriers that we work with, that you can have a felony and still get coverage as long as it was on the other side of 5 years. You can have been in probation 6 months or longer, been off probation. So let's say you were on probation for 6 months, now you're off. You could potentially qualify for insurance as long as it wasn't one of the crimes that they consider or deem a dangerous crime or that falls into their categories. I want you to give me a call if you were in the past a felon and got denied insurance and were declined for insurance, okay? So we talked about a felony, we talked about the MIB, and we talked about simplified issue. You do not even have to have a medical exam to qualify for these insurances. So I want you to give me a call. Again, I'm Garlinda Price. I'm a real estate broker and owner of Fusion Properties LLC, and I'm the owner of Fusion Insurance Group. So excited to serve you. Again, we have access to multiple carriers, so we don't have to pigeonhole you into one product. We get to shop with all of our different carriers and find you the best coverage for the best money to protect you and your family, and we are honored to do that. So again, I can be reached at 910-494-7798. I have placed my Calendly link, which is my scheduling link, down in the chat for you to give me a call. And I also want, just call me and let's talk about what you're looking to do. I forgot one thing. Private banking, right? So private banking insurance, and we'll end on that. You keep hearing about it, right? Make money from your own money, borrow from your own money, be your own bank. That is a thing. And until I came into insurance, I had never even heard of it, didn't even know what it was. And I was like, what is private banking? And so an index universal life product or policy is private banking. And what's awesome about that product, and it's a product that we can help you get enrolled with and that we can help you sign up for. What's awesome about that product is I'm turning to my notes to see what code is associated with the IRS, because I know I think it's 7702. But I don't want to tell you the wrong thing. Give me 2 seconds. Hopefully my phone won't hang up on you. Yep, 7702 tax code, private banking. And so Index Universal Life is an incredible product. A child can have an Index Universal Life product, right? An adult can have an Index Universal Life product. And so we want to help you with that. And what is awesome about this product is it has a life insurance component and a component of investments that's attached to the S&P 500. Well, at least one of the companies is, right? And so what it is a guaranteed to earn money, and it's guaranteed not to lose money, right? So it won't lose money as if you had money tied up in the stock market. And let's say you were at a negative 20% in the stock market and you were losing money over there. This product cannot go below 0.25% interest being earned on the product. It cannot go below 0%. You cannot lose money in this product. It is so awesome. So the other thing that it provides is a death benefit. So it has a life insurance component associated with it. It also will build wealth at a certain interest rate. And right now it's been averaging 10% over the long haul. On average, it's been at around 5.69%. The banks are not even paying you that. The banks are using our money every night. They're going to sleep. They're investing our money while we're asleep, and they're going on and they're making money off of our money. This is an opportunity for you to make money off of your money. You still do have to qualify for the insurance component with your help, but give me a second. We'll talk about not how to get around that, but another product that you can use in place of that. It's tax-free to your beneficiary when the money comes out. It's tax deferred in terms of the interest. And what is awesome about it is that it is a perfect wealth building tool that has living benefits. And we're going to do a whole nother video to talk about IULs, but you can borrow from your own money. So once your account with the Index Universal Life Fund has reached a certain amount and has accumulated a certain amount, and you'll know all these things in your policy when you can borrow money from it. You can begin to borrow the money for any reason at all. It could be for education. It could be to buy a car. It could be to purchase a home. It could be, hey, I just want to take some of my own money out. But remember what I said with the whole life product, that when you go to take money out of a whole life product, it subtracts from your face value of a policy. When you go to take money out of an Index Universal Life policy that you have, it doesn't subtract from your borrowing amount. It doesn't subtract from your profit and your accumulation in the account. It's subtracted way down the road later on when you die, and it subtracts from the face value of your policy. You cannot even understand the magnitude of the wealth that you can accumulate over time with an Index Universal Life product. And you can put money into some of the products up until age 70. Right? So you could actually start your child off today with $100 a month. I'm just using that as an example. Index Universal Life product as a teenager. And by the time they're 21 or 30, they're a multimillionaire. Right? Depending on what you put into it, depending on how you grow it, depending on how you build it. But an Index Universal Life product is one of the best products that is on the market for you to begin wealth building. If that's where you are in your life, especially if you have money in a 401k, if you have money just sitting in a CD, or if you have money just sitting in an IRA, and it's earning a small amount of interest, you need to give us a call so we can help you get your money in the right vehicle for it to grow for you. You still have time to build wealth. Even if you're in your 50s and you were to start putting money in now, you still have 15 years, you'd be 65. You still have 20 years, right? You'd be 75, that you can still begin to grow wealth and accumulate wealth. Private banking, it's an index universal life product. We have 2 companies that we broker with that are really incredible products. They have the best IUL products. And then I forgot what the other thing I was gonna tell you about it. But we're gonna end there. I'm talking too much. So I want you to give me a call. Let's talk about all these different things and how we can help you and your family reach your financial goals. Again, I'm Girl Linda Price. It's an honor to be here with you guys tonight. God bless you. Hope you have safe travels. Christine, I can't wait to talk to you soon. And thank you all again for your time. 910-494-7798. Let us help you. Last plug. We're recruiting across the country. If you are a licensed life and health insurance agent or broker, or you've thought about getting your life and health insurance license, we have the best company with Family First Life. We offer the highest comp, 100% starting contract. You can go up as high with the company. You can grow to 145% contract, and there's no contracts. You can come and go as you choose. You're not captive. You're not tied to anyone. You can grow your business. You can either be a lone soldier writing policies and protecting families like a superhero, or you can build a team of superheroes and leverage yourself and your time and protect people across the country as a team, which is what a lot of us are doing. And so if you're interested in a career as a life and health agent, give me a call. Click that same Calendly link down below and pop it in the chat comments one more time, and then you'll see my phone number in there again. I'm in the great state of North Carolina, but God bless you guys, and I look forward to talking to you soon. See you soon on the next video. Bye-bye.